Okay, so welcome to yet another video. You know that in a different point of time, I have talked about the financial literacy actually giving you a lot of opportunity to, create wealth. But the major problem in the financial is not all the financial sectors are going to, right? So here, this is why, I mean, in this video, I'm going to show you how to find out which financials are having the potentials and which to stay away from. So first we will go to the screen. Now you can see my screen, right? This is I'm on the stocks scan. I think this is a phenomenal website that they have made to do the work very easy for the retail investor. So I'm just using free version here, as you can see here. Now here, at first, what I will do, in the industry, I'm going to select uh, no, finance, right? I select the finance, and if I go here, latest result. So before that, let's see. I will try to find finance. Let me check here rather. Finance here. Let's say BSc Financial Service or NSC Financial Service. We just pick NSC Financial Service. Now you can see the screen, right? Now, if you see the screen, this is what you have to look here is here it is the revenue growth, right? Here you can see this is the revenue growth. Now this is for the HDFC Bank. Now you can make a very quick comparison what is happening across the different financials. For example, if I take the example of HDFC Bank, if you see here, what is the revenue growth? 8.2, right? Understand that system credit growth is around 15%. So if let's say we retail investor, why do we check, yeah, different stocks for their potential? We are trying to outperform, right? So if we are trying to outperform the market, then the most important part that you have to check, which are the companies which are outperforming the overall systemic growth. So in this system, like we are talking about the finance, so obviously we'll check the credit growth in the economy, right? So I mean, last year, not last year, I mean, as per the recent quarterly release, what we have seen that the systemic credit growth is around 15%. So anything less than 15%, we are going to consider it to be like, underperforming, right? So if you see the revenue growth to be 8.2%, check ICICI Bank around 4%, State Bank of India, if you, it is 5.5%. Look, Bajaj Finance, it is 17.8%. Look at Kotak Mahindra Bank. Um, Look at Axis Bank, right? It's 5%. So how many you've seen? So these are the poster boys of all the big banks. You see the revenue growth is very very slow and slower than the system credit growth. But if you see here, Bajaj Finance, it is around having 18%, which is actually outperforming the credit growth of the economy. Bajaj Finance, Finsa, we're not going to talk about it separately. Look here, this is Srinam Finance. The rate is even higher, 14%. Okay, life insurance we are not going to cover. Here, just look here. This is Geo Financially. Look at the growth. It is humongous growth. You can see because it is small in size. Whatever the reason is, we need to see which are the company which are growing at a very fast pace, right? So you see here it is almost 120%. And then let's see Chola, it is 20% around, right? Then Muthoot Finance, you see it is 50%, right? So now you can see um, out of the bigger banks, it is actually struggling to outperform the overall credit growth of the economy. But if we see the NBFCs are there, for example, this Bajaj Finance, then Sriram Finance, then Geo Financial Service, then Cholamandalam Financial Service. So this Muthoot Finance. So you can see these are all the company which are having the, huge amount of growth, right? So you can understand now which are company you should be, or like at least I am trying to stay away from, especially those company which are not able to outperform the systemic credit growth, right? I'm not at all checking the bad growth, I'm just only focusing on the revenue growth. Now this actually gives you a broad understanding, like, okay, what are the lenders happening in the private sector lending. You can see that the majority of the cases, you are seeing that the bigger banks are not able to outperform the systemic credit growth. Now we will remove this filter, and then we will come here and we will pick conglomerate backed NBFCs. Those are the NBFCs that we have seen, right? Like which are having a higher growth. Now, like these are the NBFCs. See, NBFC could be of many different types, right? So we are looking for this NBFC where the parentage, that the backing is given by a big group. Like that is why we are saying conglomerate uh, backed group, right? So, for example, for Bajaj Finance, it's easy to understand. Bajaj is the parents here for the Geo Financial Service. Geo is the parents here for Chola Mandalam investment. It's Chola is the group here. Similarly, I can go on and on, right? Now here, instead of taking one by one, so you can understand out of the financial space, it is actually the conglomerate based NBFCs which are actually able to outperform the systematic credit growth. Right, this should be the first thing to recognize. Now the second thing, so the second thing is here we have to check among the conglomerate backed NBFCs, which are the company which are even growing faster. Those are the company that we have to actually look forward to. Now, after applying the filter, you can see there are total 9 companies that we can see, right? Among all the companies, what do you see here? Which companies are having the highest growth? We are interested to check this revenue growth, trailing 12-month basis, basically for last 1 year comparison that we are going to do it. Here you can see, out of all the companies, I try to um, organize it. uh, Now you see I have organized it, so out of that, in the increasing order, so if you see which is having the highest amount of growth, it is Geo Financial Service, followed by Lafin Corp, then Cholamandalam, and as far that you can actually go through the entire list here. Here, something is very important for us to understand. Uh, the market is a device which is going to reward those companies which are having higher growth prospect. It doesn't check whether it is a small company or big company per se. So for this case, like, here by doing the comparison, we can understand a few things. These are the companies like, Geo, or Geo Financial Service, Poonawalla FinCorp, Cholamandalam, Bajaj Finance. These are the companies which are having much better growth prospect, because what we have seen is first layer was to check the financials. Out of that, we have almost segregated the slow growth companies which are like, poster boys of the big banks. And then when we went to the one step deeper, we have seen that the conglomerate backed NBFCs are doing much better. Out of that, we can still find out a few companies which are doing better than their peers, right? So now here, you should ideally start doing the research. Here, the important thing for us to understand that, like, for all the financials, we have to check how, at which rate the revenue is growing, and we have to check the profitability also. And profitability metrics, typically we check it by ROE, return on equity, right? So here, I just go to the tools. Let's see. Yeah, here you'll get a beautiful option which is peer-to-peer comparison, right? In the peer-to-peer comparison, see, I'm using the free version, so that is why I'm having some limitations. But I think this is still very good to understand a few things. You've seen that. I mean, if I just do a peer-to-peer comparison here, Bajaj Finance and Tata Capital, what you see here, I mean, both are belonging to the same NBFC space. Earlier you have seen that, like, what rate it is growing. So Tata Capital is growing at around 11 percentage, where the Bajaj Finance is growing around 18 percentage, right? So all growths are not being treated equally. Where the growth is coming up with a good ROE, that is a place that the actually market rewards. So you can see that the Bajaj Finance here, which is the ROE, it is a 17 percentage. And typically all the finance company, the valuation matrix is profit to book. So if you see here, one of the highest profit to book ratio has been given to the Bajaj Finance. Please do not think that, okay, the price to book ratio is around 6, so there is no scope for the I mean, this is the richly valued. Because what happens, let's say if Bajaj Finance continue to grow at a rate of, let's say, 20-23 percentage without compressing their ROE, still it can happen that the business can create wealth for the shareholder, because what is more important, just not the growth, we have to check the ROE. So if we just look the Tata Capital, like just check the market cap of Tata Capital and Bajaj Finance. If you see, um, I mean, Bajaj Finance is almost 4 to 5 times, larger than the Tata Capital. But for the Tata Capital, you see the ROE is very, very, I mean, much lower than, like, Bajaj Finance. So typically, if ROE is higher than 15 percentage, we should ideally think that this business is doing fine. That is how I used to think any business which is not creating more than 15 percentage ROE, I will not consider for the research. But right now I have changed certain way that I look at it. What I am trying to look is which direction ROE is going. If it is 11, is it possible for it to go to higher level, let's say 15%, 18%? If that happens, profit to book that you see here, 3.5, it can easily re-rate, right? So there is a possibility. So I will not simply disregard this number 11%. In fact, I will check the conference call. So if I check the conference call of this company, I can easily check that I mean, you can also read after watching this video that the company in this space, I mean, the management is guiding for higher ROE here, moving forward. So you can understand, if it is possible for this financial lender to increase their ROE, they may actually deserve more than 3.5 profit to book, right? Now let's delete Tata Capital. Instead of that, let me add Geo. So, or maybe I can type, oh, it is not giving, maybe I can write Chola. Chola. Okay, fine. Now look here. Here you see Bajaj Finance, you have seen that it's around 6 profit to book, but here you see around 5 to 5.2 around, right? Now, if you see, typically the lenders who are able to grow their loan book with good ROE, it's possible for this lender to get higher profit book. This is the most important thing. So earlier you have seen that the Chola is growing at almost 20 percentage, really good. Bajaj Finance is also growing at 18 percentage. But for both of them, you can see the ROE is around in the same level, which has shown it in the valuation here, for profit to book valuation. Now, instead of that, like, let me, instead of Chola, if I include, let's say, Poonawalla FinCorp, because earlier you have seen that Poonawalla FinCorp is growing at a very fast pace, right? If you see, Poonawalla has been growing at 73%, right? Where the Bajaj Finance is growing on only 18%. But if you see the ROE, it is only 5 point, right? Because of the low ROE, this company and is getting a lower profit to book, 3.4, 3.3 around. Now, what will happen? Let's say if the Poonawalla continue to grow at this fast pace, and then let's say ROE moves from 5.2 to, let's say, slightly on the higher side, let's say 8%, 10%, 12%. What is going to happen? This market is going to reward Poonawalla FinCorp. So if that happens, obviously the profit to book should also increase, and shareholder will obviously get rewarded, right? So this is Poonawalla FinCorp. I mean, similarly, you can make the comparison among any company per se, because uh, what is more important for you to start understanding the elimination process. If any company is growing less than the systemic credit growth, that is your first elimination criteria. At least this is what I am using it. And once that part is done, the next part is to find out which space that is growing faster. If you can figure that out, among that you can actually find out those companies which are growing even faster than the segment. And then you can check it, what is the management con call is giving. For example, Poonawalla FinCorp in their con call, they are clearly stating that going forward, they are going to increase their margin, they are going to increase their ROE. If that really happens, obviously their profit to book must increase, right? So two things can happen. First, the book value should also grow at a fast pace, revenue growth should happen at a fast pace. Plus, if the market re-rates it, I mean, from 3 to I mean 3.3 to, let's say, 4 or 4.5, obviously there will be a huge opportunity to create wealth in this space. that is how, I mean, that we should check instead of just checking out the stock price. If something is falling down by a certain percentage, we should not think that okay, this is the value buy or something. We should always check the engine. Engine is nothing but the earning. And how do we figure out the earning? This is how we can figure out the earning. And then how do we find out what is going to happen in the future? For that purpose, we have to check the management con call. For example, I was telling it for Poonawalla Fincorp, Tata Capital, they're all guiding for higher ROE and higher ROE. So these are the things that if we do it, there are better opportunity to create wealth. Otherwise, there is no point of like fixating on okay, I have invested in this bank, so I am going to just earn money only from this bank. Please be flexible, be nimble, try to find the opportunity. If your objective is to outperform the market, then try to do something. Try to be in the space which is currently outperforming and coming up with a reasonable valuation. So with that note, I will stop this video. Probably like put in the you can write in the comment section if any other space that you want me to show you in this type of comparison, and then out of that, if you want to even talk me about more about the valuation or not. So fine, with that note, please let me know how you like this format. If you have any other suggestion, feel free to put it in the comment section.